Everyone is looking for ways to save money, especially homesteaders. What would you say if I told you there was a way for homesteaders, well, anybody really, to save money on their taxes? Let's talk about it. All right, everybody, welcome back to Grumpy Acres. I had heard about homestead exemptions, but I'd never really looked into them, though. I was chasing rabbits the other day on the internet, doing a little research for the channel, and I found myself reading up on them. Depending on where you live and whether you qualify, if you live in the U.S., the state or county you live in may offer a homestead tax exemption, which could save you a substantial amount of money when paying your property taxes. Now, I'm by no means an expert on this. I'm not a financial expert. So if you're interested, after this video, I would suggest you go talking to a tax professional about them. But before we go on, if you like topics ranging from homesteading to cooking to preparedness, and you haven't already, I'd encourage you to hit that subscribe button and join our online community. Now, here are homestead exemptions in a nutshell. First off, they call it a homestead tax exemption when in reality it can possibly apply to any property you own, whether it's a rural farm or a suburban lot, as long as it is your primary residence. Here's a graphic on homestead exemptions by states. As you can see, many states have a cap on how much you can save on your tax bill, while in a small handful, that amount is unlimited, based solely on the value of your property. I'm happy to see that my state, Kansas, is amongst that group. Now, how does a homestead exemption work? Most states offer exemptions that could help you reduce your property tax bill and receive protection from creditors during bankruptcy. These protections are designed to help you stay in your home and avoid getting priced out of neighborhoods and areas where property values are increasing. The homestead tax exemption helps to shield a portion of the home's value from property taxes. Homeowners may need to apply for the benefit and should check with their local government on how to do so. What's an example? Homestead exemptions primarily work by reducing your home value in the eyes of the tax assessor. So if you qualify for a $50,000 exemption and your home is worth $200,000, you'll be taxed as if your home is only worth $150,000. So who qualifies for a homestead exemption? Each state and even each county can make its own rules on who can qualify for a homestead exemption and how much it is. In most cases, people with permanent and total disabilities, veterans, seniors, that's people 65 and older, and surviving spouses of veterans and first responders can qualify if they are on limited income. Most states often require that you be one or more of the following: an individual with a disability, an older adult, a veteran, a law enforcement official, or first responder with a disability. For example, according to the Kansas Department of Revenue in 2023, you must have been a resident of Kansas for the entire year of 2022, own your own home, and had an income of $50,000 or less, be age 65 or over for the entire year, or be a disabled veteran the entire year, or the surviving spouse of a claimant who is either a disabled veteran or a person 65 years or older for the entire year. So how do you apply for a homestead exemption? Depending on your location, you may be able to apply online with your state treasury office or in the appraisal district in which you live, such as the county tax assessor's office. If your government doesn't accept online forms, you'll need to print out the paperwork, fill it out, and file it by the filing deadline, which can vary but is commonly in March. In the paperwork, you'll likely need to prove that you qualify for the exemption with documentation such as images of your driver's license to show proof of age, military discharge papers, and annual tax files. So what if you don't qualify for a homestead tax exemption? There are alternative ways to lower your personal property dues, and if you're looking for budget room, here are several ways to lower your payments. Number one, look for other exemptions. Beside homestead exemptions, you may qualify for further tax relief measures if you're a person with disabilities, elderly, or a veteran. Number two, limit improvement and remodeling projects. If you construct an enclosed porch on your home, build a large deck in the backyard, or install a large tool shed, your home's value will likely increase, and with it, your property taxes. Number three, talk with the assessor. Look at how much your neighbor's homes are valued at. If another home identical to yours is lower in value, call the assessor and ask if there could have been an error. You could also pay to have an independent appraiser give a second opinion. Fourth, file a tax appeal. If you notice your tax bill itself has an error, such as wrong square footage, file a tax appeal with your local government. A lawyer may be able to help also. Like I said, I am by no means an expert on this subject, and if you're interested, I would suggest talking to a tax professional. So here are the key takeaways from this video. A homestead exemption reduces homeowners' state and county property tax obligations. The exemption can help protect the home from creditors during bankruptcy or should one of the spouses die. The provision provides surviving qualifying spouses with ongoing property tax relief in certain states. The exemption only applies to one's primary residence, and although most states have homestead tax exemptions, the rules and protection limits vary. So if you found this video informative or entertaining, hit that thumbs up button, hit that notification bell so that you'll know next time we put out content. And like I said before, go ahead and think about subscribing or joining. Most importantly, take this information and use it to go pursue a life debt-free. Take care. Thanks, Milo.